Buying a home in Atlanta right now is not for the unprepared. The market will move fast and sellers will absolutely test you. And one decision made without the right information can cost you more than you realize. I've been selling real estate in Atlanta for years, and I will tell you, the buyers who come out of this process feeling good are the ones who were informed and they knew what to do and when to do it. The ones who struggle or regret their purchase are the ones who found out about issues maybe after they closed on their new home or basically before it was too late. So if you are thinking about buying a home and you want to protect yourself and you want to be knowledgeable, this video is for you. These are the mistakes that I want you to avoid. The first mistake is walking away or maybe not even considering an as-is listing. A lot of buyers see as is in a listing description and they immediately assume that there is a major problem with the house and they should avoid it altogether. But don't discount them. As is just means the seller isn't planning to make any repairs or give you any concessions up front. It does not mean that you give up your right to a home inspection. You were always entitled to a home inspection, and whether you're buying a house as is or not, I want you to get one. Here's my pro tip. More often than not, if something significant comes up after you do an inspection, the seller is likely to work with you, because if it's a problem for you, it's going to be a problem for the next buyer too. A serious issue doesn't just disappear because one buyer walked. Most sellers honestly will figure that out pretty quickly, and they'll either make the repair or they a lot of times will end up giving you some money at closing to take care of it if it's a major problem. Here's the thing, sellers tend to list as is because they don't want to spend 2 or 3 weeks going back and forth with you over a bunch of nothing things like a leaky faucet or a cracked outlet cover. They want to sell the house, not manage a punch list. This is very different from a seller who is hiding something major. Learn to tell the difference and don't let the two words as is make you walk away from the house that honestly could be a great opportunity. Also worth knowing, in Georgia, even if a seller is selling a house as is, they are required to disclose any known material defects. As is doesn't mean the seller gets to hide what they know. If you're working with a good agent, they will know how to navigate that conversation and use your inspection findings as leverage when it matters. The second mistake, and this is a big one, not getting a sewer scope inspection. Most buyers get a general home inspection and they call it done. But in Atlanta, especially in our older in-town neighborhoods, the sewer lines running from the house to the street is one of the most expensive things that can fail. And a standard home inspection will never catch it. A sewer scope is a separate inspection where a plumber comes out and they will run a camera through the sewer line from the house all the way out to the main. It can identify root intrusion, cracks, collapsed sections, or a line that has simply reached the end of its life. In older neighborhoods where the trees are massive and the pipes have been in the ground for decades, this comes up all the time. Here's something I really want you to understand, especially if you're buying an older home. A lot of these homes were built in the 1940s, 50s, and 60s. Many of them still have the original cast iron pipes. Cast iron pipes deteriorate from the inside out. And over decades, the interior of the pipe starts to corrode and break down. And when it does, it develops what inspectors often describe as alligator skin type texture. And what happens when that starts to flake off in the inside, waste sticks, toilet paper accumulates, and then you will over time start to get buildup, and that's where you get the sewer backups. And it's just an expensive problem. A super easy way to make sure that you avoid that is to get a sewer scope. And listen, sometimes in these houses, the cast iron pipes are in really good shape. And in those cases, a seller is likely not going to give you any kind of concessions if the pipe is clear and everything is working properly. But if it is, it's just one of those things that you are going to have to understand that you will probably have to replace it at some point. So you just have to be prepared for it. A sewer scope typically costs a couple $100, and it's one of honestly the best investments that you can make during your due diligence, or what we also call your inspection period. If your general home inspector does not offer it, ask your real estate agent to recommend a plumber who does. In Atlanta in-town neighborhoods, I consider it a standard part of the inspection, not an optional add-on. The third mistake is not checking the insurance history. There is a report called a CLUE report, and it stands for a Comprehensive Loss Underwriting Exchange. And most buyers have never heard of it. In fact, most real estate agents haven't heard of it either. You can request one for free once a year, and it shows every insurance claim that has ever been filed on a property. Water damage, fire, wind, flooding, it's all there going back several years. Your home inspection is important, but it can only tell you what's visible on that day of the inspection. An inspector is great, but they can't tell you what happened to the house 2 years ago and what was repaired and what wasn't, but a CLUE report, are you ready for it? We'll give you a clue. Okay, I'm sorry. That's where the CLUE report comes in. If a home had major water intrusion event, a roof claim from a major storm, or a history of flooding, that shows up. And once you have that information, you can ask the seller to provide documentation proving that the repairs were done properly by a licensed contractor. If they can't produce it, or if the history shows a pattern of repeated claims on the same issue like water intrusion from storms, that tells you something important about the property before you're committed, and maybe you would rethink buying that home. And there's also kind of another layer to this that buyers don't always think about. Insurance companies are paying very close attention to claim histories right now. A home with multiple past claims, even if everything was repaired, can be difficult or expensive to insure in the future. And in some cases, certain carriers won't write a policy on it at all. So you want to know that before you're under contract, not the week before closing, when your insurance agent calls you and tells you that your premiums are going to be absolutely through the roof, or that they're not going to cover the house at all. Request the CLUE report in your due diligence period. It's free, it takes about 5 minutes, and the information it gives you can change the direction of the entire negotiations. The fourth mistake is not shopping your mortgage interest rate. Most buyers go with the first lender that they talk to. Sometimes it's whoever their real estate agent recommended, sometimes it's their own personal bank. And while there's nothing wrong with starting there, stopping there is leaving real money on the table. Let me explain. Even a 0.25% difference in your interest rate adds up to a significant amount of money over a 30-year loan. On a $600,000 mortgage, that difference can be tens of thousands of dollars over the life of the loan. That is a car or a college fund contribution. That is money that stays in your pocket, or it goes to the bank depending entirely on whether you made one phone call or filled out an extra mortgage application. Here's what I want you to do. Talk to at least 2, if not 3 lenders before you commit. Compare the interest rate, and this is a big one. Compare the fees in their loan estimate, and pay attention to how responsive they are, because communication matters huge when you're in the middle of a transaction and timelines are tight. And here's a pro tip. Lenders will compete for your business when they know that you're shopping around. Tell each lender that you're comparing options. You will be very surprised how quickly rates and fees and all of these things become more negotiable when a lender knows that they're not the only one in the conversation. One thing that I want you to be very careful about though, if you're going to shop rates, you have to do it while you are still searching for a home. Switching lenders after you're already under contract and your loan is already deep in the process can delay closing. And here's something most people don't realize. All the deadlines in your contract that you and the seller agreed to, They do not change just because you change lenders. Your due diligence period, your financing contingency, your closing date, all of that stays the same. If your new lender cannot hit those deadlines, you are going to be in a very, very difficult position. So do the comparison work early and make your decision before you go under contract on a home. The fifth mistake is opening new credit before you close on your new home. This one seems obvious, but oh my God, people do this all the time. You're under contract, you're excited, you start picturing how the new house is going to look, and then you get on a furniture store's website and you start opening up the store credit card because you're gonna get a huge discount, or you're at a dealership looking at a new car because your commute is changing. Stop it. Do not do any of that until you have signed all the papers at closing and the house keys are in your hand. Any new credit you take on between your pre-approval and your closing date can change what's called your debt to income ratio. And when your debt to income ratio changes, your lender has to rerun all your numbers. And when they rerun your numbers with the new obligation factored in, your loan approval can be in jeopardy. Even if you've been in the process for weeks, in your days from the closing table. I have a crazy story for you. One of my real estate attorneys that I work with all the time said she had some buyers one time that were under contract on a lake house, and about 4 days before closing, they went and bought a brand new boat to go with the lake house. Well, guess what? That when they financed the boat, it took their debt to income ratio over the limit. So they couldn't close on the house. They couldn't qualify for the house anymore. So now they have this boat with no lake house. Don't do that. How terrible. And I want to be specific about what this includes, because sometimes buyers think it's about the credit cards. It's not. It's a new car payment. It's a new personal loan. It's financing through a furniture store. It's co-signing on someone else's loan. Any of those things can affect your approval. It does not matter how small the monthly payment is. Lenders look at a total monthly obligation, and any new obligation changes the math. There is also typically a hard credit pull right before you close. Your lender will re-pull your credit again to verify that nothing has changed since your initial approval. If something has changed, there's a new account, a new inquiry, a new balance, they will absolutely find it. And when they find it, it changes your qualifications. Closings can get delayed, or in some cases, like the lake house, deals fall apart altogether. The furniture will still be there after you close. The car will still be on the lot, I promise. So wait it out. Buying a home is one of the biggest financial decisions you will ever make, and a little preparation goes a long way. Know what to watch for, ask the right questions, and don't be afraid to dig into the details. That's how you protect yourself. Well, and a really good real estate agent. And hey, if you're trying to figure out your next step and you just want to have a real conversation, text or call the number on your screen. Yes, that is my personal cell phone number. Please don't prank call me, but I'm absolutely here to help you. And hey, if you want to know exactly what you'll owe at the closing table, every fee, every charge, what it covers and why, check out my next video on closing cost. Link is on the screen right now. I hope to see you over there.